Welcome back to Morning Brief, brought to you by Invesco. The summer months are typically slow for investors, but billionaire Warren Buffett, he kept busy. Buffett, who celebrated his 94th birthday over the weekend, steadily trimmed Berkshire Hathaway's holdings in Bank of America by more than 14% during July and August. Buffett also unloaded roughly half of his shares of longtime favorite Apple during the summer months. Joining us now is Lee Munson, President and CIO at Portfolio Wealth Advisors. Lee, great to have you here. Thanks for taking the time with us on the day. All right, so first and foremost, what do you think is the strategy behind these moves that Buffett made during the month and recent weeks?
Well, you got to remember, he's been in Bank of America since about 2011. He's done very well in the stock. He's just simply reducing a position. He also reduced some Capital One, which tells us one thing. He doesn't, obviously, big banking isn't what it used to be, and we have to look at what he thinks the long-term prospects are. Also, with Apple, Warren Buffett has made an amazing amount of money on Apple. It's still gonna be his largest position. He's gonna have about 100 billion of it, that he has after these sales. I think investors shouldn't read too much into it. Let me explain this. When you're up 150, 200, 250, 300, 400%, it's okay to take a profit. If you read all of the Berkshire Hathaway annual reports for, last, 20, 30 years, he talks about that every once in a while. When you double or triple your money, you can take money off the table. Here's sort of the read between the lines I think everybody's trying to surmise. Are there better prospects other places? And I think when you see these tiny little positions like HEICO and these tiny little positions like Ulta Beauty, you start to think, is there great value in the market outside these big names? And so if you have big winners, you want to eventually take some of that money off the table and push into other areas. I think that that's really the message here. And also, he's sticking with that oil trade. I did not. I understand the story about Occidental. I understand Chevron. But those have not done great over the past few years, and he's still with it.
It's interesting that on the one hand, Lee, you say don't read too much into it. But on the other hand, if you take a look at exactly what you just described, getting a little bit off the top for a company like Apple, that's exactly what analysts have really started to rally around over the past couple of weeks amid this kind of great rotation. We're seeing a bid up in some of the smaller cap equal weighted S&P 500s as opposed to those big tech names. Did Buffett know something that the rest of us didn't, as always here?
Well, I think it was pretty obvious when you have very little breadth in the market and everything's based on this big tech AI trade. Certainly there's going to be a rotation, but I think here's you have to think. If you just generally observe the market outside the Mag 7, there are tons of small and mid-sized companies. And I'm just talking about companies that are under $100 billion. You take a company that's 50 billion, market cap, and that's considered small today. They've been languishing for some time. So I don't think it's a really, a too deep of observation. Now, the timing, certainly, I get your point that how did he know that this rotation was going to occur in the summer? And you know what? Sometimes people like Buffett, they just have that magic ability to see things. But he also has a larger crew. There's a lot of people, not just Buffett, that were rotating back into value. I think when you look at the valuations this summer, it just becomes obvious that eventually small cap's going to have to rotate. But also remember, those little positions like in HEICO, like at Ulta, those are tiny sub-billion-dollar positions. He's just starting to pick away. What is happening, a lot of cash is being raised, but there's not a speed at getting into those sector rotation trades into value. I think that that's an even more important point to make. All that dry powder hasn't been spent just yet.
It's really interesting as we're thinking about so many of those dip buying opportunities that may prevail if September holds true and we do see some type of weakness. Where would those dip buying opportunities push Berkshire Hathaway? Where do they push you? Where are those opportunities you're looking at and perhaps keeping some dry powder ready, Lee?
Well, I think you've got to look down the market cap a little bit. Obviously, there's some issues with the election, right? We don't know about how that regulation is going to go. That's going to affect banks and energy. So I'm a little less interested in that area going forward. But I think when I look at where some of the great plays can be, I like to look at beat up retailers. I have my own little list of things that have gotten very cheap. You start looking at some of this low valuations where you're dealing with trades, dealing with people who are in the lower income still. You think of like a Dollar Tree, you think of a Dollar General. You think of some of these beat up retailers like Ulta. I don't think Ulta is really the company you want to go, but anything that's going to get consumer spending on the, starting next year, I think that's where a lot of action can see, because eventually people have to move away from the hyperscalers and AI story and think about where that money is going to flow into. And if the economy is going to soft land and spending is going to continue on, what names have been crushed over the last couple of years, I think that's where you go. So I think a lot of things that have to do with the retail spending trade.
It's interesting, though, because as we've gotten closer to the end of this earnings cycle, you're really seeing a lot of contradiction in these retail names. You've got Walmart on the one hand, and then you've got even Ulta struggling on the heels of their earnings alongside the likes of Lululemon. Where is Buffett finding the clear thesis on which companies are going to be able to continue to benefit from consumer spending, as we are starting to see some cracks across the retail sector?
Well, I'm not sure he is. I'm not here to argue with one of the richest men in the world who's been on the earth twice as long as me. But let me tell you, when you take a company like Ulta, I think Walmart's eating their lunch. I think, if Ulta doesn't have anything special, Sephora has something special. If you ask my daughter, you ask my wife about Ulta, they'll say, please, for that type of price point, they'll just pick up those things over at Target. So I'm not, I don't really see a lot in his 13F that suggests he's on that trade again. I think he's still looking at classic Buffett stuff. What's cheap? What's trading for cheap earnings? What there's a catalyst. I think more that I see in that 13F is that he still believes that aero defense and military spending is going to continue. And I see more in what Buffett is looking at, especially insurance, that position in Chubb that he just keeps pushing. He can't not make money off of Chubb. But again, it's his business, it's insurance. I think what he knows best. I don't think we've yet to see those real plays in Berkshire Hathaway outside of Ulta. I think it's something that, you want to keep looking. And just because the first strike in that area of consumer spending being Ulta, I'm more interested in what he's going to buy over the next 6 months. I don't think right now I've seen it yet in the tea leaves when you holdings.
All right, we'll see what those acquisitions or what those purchases in the next 6 months do for this company that's just struck and held above this $1 trillion market cap here. Lee Munson of Portfolio Wealth Advisors, thanks so much. Appreciate it.